Hey, what's up guys? John here. Over 3,000 bank branches have closed inside of the last 10 months.
Santander Bank is planning to close 16 locations in Massachusetts, including 5 in Boston.
The Bank of America on Truxtun will be closing in February next year.
What we're walking into is a tsunami of problems inside of the banking sector. Not just large banks, even though many of these large banks are closing locations, JP Chase, Bank of America, Wells Fargo, but a lot of the regional banks, the credit unions, all these small banks, you're probably seeing in your own neighborhood. That local bank you used to go to, it's no longer there. You might be driving 5 minutes or 10 minutes further to go to another location. That's happening all throughout the country, but for a big reason.
JP Morgan's CEO, Jamie Dimon, wrote a letter to shareholders saying that the banking crisis is not yet over.
What we're going to witness is going to be unreal. And I'm going to show you exactly what that looks like step by step. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate the people about what's really going on. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any problem on your credit report, do not let it sit there. Go to GreatCreditFast.com by clicking the link in the description below this video. If you have intentions of growing and scaling a business or investing in real estate, you're going to need exceptional credit to get financing and funding in 2024. Click the link in the description below to schedule a free strategy session. Take a look at this. So you remember when Janet Yellen came out saying that she sees bank earnings pressure mergers after March crisis. She came out, interestingly, she said this twice. So June 2023, she said this, and then she said this again June 7th. So 2 weeks, 3 weeks apart, she said the same exact thing. Treasury Secretary Yellen says she wouldn't be surprised to see more bank consolidation. She goes on to say, there's motivation to see some consolidation. It wouldn't surprise me to see some that are going forward. Of course that's going to happen. They put in increased regulations on the entire banking sector. If you look at what they've done, it's unreal. They reduced their reserve requirements, these banking reserve requirements, to zero. Banks did not have to hold any money. They were lending money out everywhere. They were making fees left, right, and center, from mortgage loans to credit cards to you name it. Every financial product, they were able to open out and extend these lines of credit. Now, that's all changing. And because of that, and on the backs of higher interest rates and a suffering consumer, banks are sitting on a bunch of losses. They're sitting on a bunch of problems. And so what's going to happen next? Well, I'm going to show you. They're now saying that U.S. banking crisis could close up to 190 banks. 190 banks could collapse. So, look how dramatic that is. 190 banks could collapse. Do I think that's going to happen? Well, you just ask yourself a very simple question. How do banks make money? They make money by lending money into existence to consumers who can afford to borrow, who can afford to pay back. Right now, many consumers are pushed to the brink. So how are consumers going to be able to borrow money at these high interest rates? Well, let's look at what their assets are, what these banks have done. They've lent money on credit cards with record high defaults. They've lent money on commercial real estate. How's that working out? They lent money on a lot of residential real estate. The average down payment was 6% down. Most people are negative equity on their properties right now. So you're looking all across the board. Banks are sitting on one bad decision after the next. So what do I think is going to happen? JP Chase is going to go out there and acquire more and more banks. A lot of these very large institutions are about to get a hell of a lot bigger over the next year or so. Loan defaults are a dangerous emerging trend 8 hours ago. Right here, Uptown, one Wells Fargo goes into receivership after a default $157 million loan. Fed Walker credit card usage, loan defaults slowing economy 4 days ago. Look at this. The trend, what they're saying is because of social distancing and people, not needing to go into branches, and because of, people embracing technology, they don't need to have all these bank branches. And it could make sense. They don't need all these bank branches. But you start to think about what that looks like when everyone's doing everything on their phone and they can't go see a banker, right? Because that, I believe, is probably not in the so far distant future. I wouldn't be surprised if in 5 years there are no more bank branches. Instead, everything is done on a mobile app, or everything is done online, or maybe there's only a few bank branches. But what we're walking into is the slow erosion of face-to-face customer communication and face-to-face customer engagement at banking locations. Look at what's here. Final weeks until Chase Bank shuts down 5 more locations and customers must take action to secure their money. It's insane. In fact, the banking giant will close more branches than any U.S. bank in the U.S. Sun previously reported. Areas with duplicate locations closed down dozens of banks over the past years. The company aims to expand its footprint in new regions. Our goal is not to have the most branches, but to have the right branches in more communities, serving the financial needs of our customers. Do you think that they're going to serve communities that have a lower income or higher income? Think about that. They're probably going to serve communities that are higher income because those customers are going to be within close proximity. Those customers have more money generally to deposit. Those customers are going to be more stable as the economy starts to sink. So what's ultimately going to happen? Some of these C-level neighborhoods and D-level neighborhoods may be the first ones to lose out. It goes on to say the closure will impact California, Indiana, and Texas. JP Morgan Chase recently announced plans to shut down 3 branches next month, 2 locations in California, 1 in Indiana, another Chase Bank in Indianapolis, and also shutter one on December 1st. The financial services arm of the bank, JP Morgan, plans to close 2 more locations in Texas this year. Company filed paperwork to close banks after 90 days on September 19th. California closures. The first closure in California is Foothill in San Gabriel in Azusa, roughly 40 minutes east of LA. The 2 will close down on October 24th. You start to look at all these 3,000 banks have closed down in 2022 alone. 3,000, right? So you start to look at what this looks like. The report also found 7,000 bank branches closed between 2017 and 2021, representing 9% of all bank branches. So between that essentially 4-year period, we closed half of that number inside just the last 10 months. So you start to really pay attention to what this trend looks like. It's interesting. And you look at what these banks are doing. What the banks are doing, they don't want to scare people. They don't want to put this out on the mainstream. They're not going to hear about this. And the reason for it is because I believe it's going to spark a lot of distrust inside of the system. And they don't want that. So what they're looking at, and they're not telling us about, now they're starting to kind of come out a little bit, that they've quietly cut 20,000 jobs so far this year. 20,000. Like that, I mean, you think about that, a football stadium, a large football stadium, that holds 75,000 people. So you're looking at a third of a football stadium of just people that work in bank branches, right? This is absolutely massive. And they're doing this quietly. This doesn't include mortgage lenders and people that are associated, but because I believe they have the data. They understand where consumers are. They understand their market better than anybody. They're seeing what's going on with bankruptcies. Like commercial Chapter 11 bankruptcies soared 61% year over year to 4,553. This isn't individual bankruptcies. This is commercial bankruptcies, 4,500 bankruptcies, right? Commercial bankruptcies increased 61%. Then you look at what's going on with home sales. September home sales dropped to the lowest level since the foreclosure crisis, 15 years ago, right? 15 years ago, 15 years ago. And home foreclosures dropped a whopping 34%. They're up 34% from the same time last year. So even with the national economic upturn and job stability, it's evident that some homeowners are still grappling with the pandemic's financial aftermath or encouraging new challenges. Although foreclosures are on the rise, they remain well below the levels recorded during the 2008 financial crisis. Well, it has to start somewhere, and that's what we're walking into. We're walking into what I believe is the first inning, right? The first inning of this thing is really going to start to ramp up. Then it's going to be November and December, and then January and February. Every single month is going to get much, much, much harder. Unfortunately, I wish it wasn't the case. But if you look at where consumers are, you look at where inflation is, you look at what Jerome Powell is saying, he's saying that interest rates are going to be higher for longer, right? They're going to bleed out the consumer. That's what's happening right now. And so if you look at, the big investors, what did they do last time? 2007, 2008, 2009. They were hoarding cash. They invested. I mean, some of the great names, Sam Zell, some of these really wealthy individuals, what'd they do? They went out there and bought tons and tons and tons of assets, right? There's a billionaire. His name is Hugo Steins. Hugo Steins, he made a fortune during the Weimar Republic. And how did he do that? Well, in the period in which inflation started really taking on, what did he do? He borrowed depreciating currency and he started buying assets during the period of distress. He was buying shipyards. He was buying large blocks of real estate. And then what happened? At the end of the day, everyone had all, wheelbarrows full of depreciating francs. And then what did he have? Hard, real assets. And he became a billionaire from it. Same thing's going to happen now. Same thing is happening in this situation. We look back on history. That's what we're walking into. America is going to print our way into oblivion over the next couple of years. Banks, financial institutions, they're getting prepared for it. They know where consumers are. They know what's about to happen to this economy, and they're getting ready for it. The smart are going to get absolutely filthy rich. That's what I believe. I believe the smart are going to get absolutely filthy rich over the next couple of years. But many people aren't ready for it. Many people think, hey, we're going to see a soft landing because we haven't seen a recession. We haven't seen anything major in 15 years. What we're witnessing right now is the death of 1,000 cuts. Every week it just gets a little bit worse, just a little bit worse. But what are we walking into right now? With the student loan crisis, with all this debt that's coming in, we're walking into a big, big problem for the consumer and a massive opportunity for investors. So what do I believe? When I look at MetLife Insurance and when I look at CNBC and what they're saying, that they are going to own 40% of all single-family homes in America by 2030 in the next 6 years, they're going to have a plan for it. They're going to see a mass liquidation, a bunch of panic sellers, a lot of distress, and they're positioning themselves for it. They're positioning themselves to run out there and seize the opportunity like Hugo Stein's did during the Weimar Republic. That's what they're getting ready to do. It's unbelievable. It's happening. I never thought that I would see something like this happen in my lifetime. How, this would have all seemed so crazy a couple years ago, but here we are. 2024, 2025, get ready for it. It's going to be the greatest rug pull in the middle class in American history and the greatest investing opportunity and business opportunity for smart and savvy entrepreneurs and investors who are reading, who are studying, who are building on a game plan, who are fixing their credit, they're stacking cash, they have an online business, they're getting out of high interest rate consumer debt, they're making all the right moves. Now's the time. Now's the time. What do you think about this situation? Where do you see this all going? Do you think this 3,000 bank branch closure thing is the beginning of a tsunami, or do you think this is the end of it? Drop below, we'll have a conversation about it. If you'd like to fix your credit to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item under a credit report, go to GreatCreditFast.com, click the link and schedule a free strategy session below, and I'll catch you guys in the next video.